The Trump administration is reportedly eyeing bank regulation consolidation. According to a report from the Wall Street Journal, President Trump's team is discussing plans to collapse the functions of the FDIC into other regulators. Now, this comes after the Elon Musk-led DOGE and newly acting CFPB head Russell Vought temporarily closed CFPB headquarters and ordered a work stoppage. Here with more, we've got Kendall Garrison, who's the president and CEO of Amplify Credit Union, a private fee-free banking and lending services firm based in Texas here. Good to have you here with us, Kendall, and thanks for taking the time. First, what would this ultimately mean if we were to see some of those duties passed on to other regulatory entities?
Well, I think it's interesting because CFPB was really founded in the aftermath of the housing crisis and really built regulations around bringing financial institutions over $10 billion in assets under control and a stronger regulatory regime, which was really needed. I think the housing crisis really proved that very large for-profit financial institutions don't have a great track record of controlling themselves, regulating themselves, and operating in the public interest. And so many of the duties of oversight from the FDIC, the Office of the Comptroller of the Currency, really transferred into CFPB in the aftermath of the housing crisis. And so as we see CFPB begin to wind down and its future become very, very uncertain, many of us in the financial services industry are really looking around trying to figure out what is the next step? What does the regulatory environment look like for us going forward?
And so does that spell out another, and especially as we're thinking about the housing situation right now, we're facing an affordability crisis where, people are trying to make sure that they're going to have the means long term to continue to pay down mortgages and getting approval as well for historically high prices on average for homes. So combine what we're seeing in the housing market right now with the CFPB perhaps delegation of responsibilities to other entities and how that could potentially put us back in the same position as before.
Well, here's what financial markets don't like. Financial markets don't like uncertainty. We've seen bond prices or bond yields rise just in the last several days as the threat of tariffs have come into play. We've seen bond yields rise as inflation is proven to not yet be tamed. And so it's that level of uncertainty that makes interest rates higher, that makes the affordability for 1 to 4 family real estate even more challenging in today's environment. And we're in Austin, Texas, and so Austin certainly has an affordability challenge.
Yeah, you've had a lot of tech companies move into that region, we do know, in recent years, and it has been booming. I've seen it with my own eyes a few years back in visits. All of these things considered, how and where do you believe the first big changes in consumer protections would be if we did see the CFPB see its responsibilities disbanded?
So I think it's interesting. If we look back at CFPB, they have returned about $21 billion to consumers in the form of fines against very large financial services companies. And so if those protections go away, I think we're going to see Americans pay higher fees for their bank accounts, for their checking accounts, higher transaction costs. And so that's going to even impact the affordability issue more as people pay more for their banking services.
If you had the ear of the Department of Government Efficiency and those who have interest in running it right now, what would you tell them about the needs for the CFPB to have a more sustained footing going forward?
So it's my opinion that the CFPB is needed. It needs some reforms. It has a single director now, and I think a multi-director, a board of directors, a bipartisan board that provides oversight for consumer protection would be important. I also think the funding mechanism needs to be repealed and not draw directly from the Federal Reserve for their funding and go through the appropriations process like everyone else. But consumer protection is needed. It is a valuable service that they provide to people of modest means primarily, and those are the people who need protection.
Kendall Garrison, thanks so much for taking the time. Appreciate it.
Thank you.